Hey, good afternoon, everyone. I'm Paul Huet, the Chairman and CEO of America's Gold and Silver. I've just been tasked with an impossible task. They asked me to open up, explain my company in 10 seconds. I asked them if they should be drug tested again, because I can't do it. I said, we've got a great company. America's Gold and Silver is an exciting company. Happy to have been here for the last 7 months, here with Oliver Turner. It's been a hell of a turnaround story. We're very excited to give you an update. We've got a lot going on. After we've raised that $100 million of debt, we have been putting that to work. The mine is singing on all hymns here, so things are going very well. We're excited to be here at Beaver Creek, and I couldn't do your 10 seconds, Tom, but I'm sure I got into that 30 seconds, so we'll start with that. And actually, Matt, I do remember an earlier interview back with a different company when I said if you'd worked with us, we'd have drug tested you that morning, and I heard you pass. So good on you. It's good to see you.
Thank you very much.
It's great to see you.
Thank you very much. Thank you very much.
He's like, get him off my stage. No, I'm just kidding.
Okay.
We gotta have some fun, right? We gotta have some fun. We've got 100 meetings.
He's back. The only way he gets away with this is because his share price is quadrupled. Okay, since we last saw him. Okay, so things are going well. You're going to take us to church a little bit here and tell us about what you've been up to. And Oliver's also here. Hello, Oliver.
Hello.
You might get a word in today.
We'll try.
Who knows? Who knows?
Absolutely.
Look, I think it's all smiles at the moment because things are working out. Silver nearly $42,
Amen.
which is obviously great. Antimony, which we're going to talk about, recoveries are super. That can make a bit of a difference to the bottom line as well. But let's try and remind people what you got and what you've done since I last saw you, and then we'll kind of get into what you're going to do with the money. And what I'm interested for this conversation is understanding kind of commercial realities of how you can move this forward, not just in terms of share price, but actually generating real dollars. Okay. So what's been happening?
Like, for every company we've been part of, it always goes back to the same thing. How do we make money? It's that simple. How do we make money at the mine so that our shareholders don't have to get diluted year after year after year and our mines are actually generating cash? For us, our focus has always been, no matter what company we've been with, whether it's Klondex, Karora, America's Gold and Silver, it's about turning the mines around, getting that mine to work. Don't rely on other pieces of foundations of money coming in through the door, whether it's equity, whether it's a convert, whether it's whatever you call it. We've always been very focused at make the mine work. Once you make that mine work, our lives change. And we know what we inherited wasn't working, Matt. This mine it's an older mine. We've got some of the greatest people you're ever gonna find in the US here. You spend a lot of time underground at this mine, and what you will find is there's a lot of good people that care at our operations in the US, our operations in Mexico. They're dying for some leadership, and we needed some cash. And as you know, we strengthened the balance sheet. We cleaned up a lot of our debt. Oliver talked about that in the last call here. But what we really did here in the last $100 million is really, we're deploying it to some very specific targets. We're just starting some of them. This year, we're looking at getting the shaft work done, and that's a big one. But ahead of the shaft work, you have to get muck to the shaft. And in our case, when you start looking at this mine, a mine that's been around for 100 years, there hasn't been any long hole here in more than 3 decades. In 2002, the mine did 5 million ounces of silver. It hasn't seen something like that since back in 2002. What are we, 2025? 23 years later, the mines, we're doing about 1.3, 1.4 million ounces. I'm looking forward to next year when we cross over that 2 million ounces. We haven't put out guidance next year, but look, our numbers are going to step up just like we have in the past. And it will be a result of reintroducing long hole mining method. And I'm very proud to say that we have tested our first stope. The stope is around 60 feet in strike length, about 60 feet in height. And we carved that out surgically. If you came underground, and there was a lot of people who did come underground, by the way. We had an analyst tour group come down. We had a board of directors tour come down. When you look at that stope and you CMS the stope, it looks like we carved it out with jacklegs. It looks as though we went down there with handheld drills, but we didn't. We went down there with one guy drilling all these holes and then a remote control mucking at the bottom of it. So our productivity rates are about, instead of 6 tons per mancha, we're about 60 tons per mancha. 10 times the tonnage factor. That reduces to them our efficiencies increasing significantly, our cost per ounce, our cost per ton reduces, and enjoying these silver prices. Well, it's a recipe that is where we're heading here. We've never had it a great opportunity like what we see ourselves. So this long hole, we just got to get more of it. Our neighbors have been doing it at a great pace next door. They're doing 100% long hole. You come next door to us, we're within 10 miles from each other. One mine does 100% long hole, one mine does 0. Up until now, our first stope's already done. It's out, it's mucked out. We're starting to fill it. But the other key things that we need to do to sustain this now is finish some waste development, put in a batch plant, and then upgrading the shaft. So our shaft, our infrastructure, if you look back for the last 20 years, 2 decades in a row, you will see that we have had the ability to move approximately 700 tons of rock a day in that shaft. So that is ore or waste. 700 tons, whether it's 400 tons of ore, 200 tons of waste that day. We haven't been able to exceed that 700 tons a day. Our goal is to get it to over 1,800 tons a day. And how do we plan on doing that? Well, step one is increasing the motor sizes, and we've been talking about that, and that's happening now. We're going to put out an operational update here probably in the next 2 weeks. We're actually ahead of schedule on several of the tasks, so they're phased approaches, Matt. Phase one is upgrade the motors in the main hoist. Phase two is upgrade the braking system, and that will allow us to go from that 700 tons per day to around 1,800 tons a day. And then we can move the waste that is all underground right now that's preventing us to getting to the new ore headings. You start looking at some of the drill bit results here, and I know we were laughing here, just chuckling about some of the results here, but you know, we have some drill results here. I'm just going to read one right out of our press release. It's 24,913 gram per ton. And I know I'm cherry picking, but let's just read it. It's a real drill result with 17% copper. That is 60 times higher than the average grade of what we mine. But we're hitting some of this stuff 2-3 times our average grade. We're already mining one of the highest grades in the world. You look at who on the planet right now is mining silver at 400 gram. You'll find the list is less than 5 people. There are not many silver operators out there mining over 400 gram. We're over 400 gram. Some of the results that we're talking about here are 2, 3, all the way up to 60 times that grade. So moving that rock that I'm talking about, the waste, moving it out of the way so we can get access to the ore, increasing that shaft capacity, and then injecting long hole, it changes us forever. We will never look back.
Explain something to me technically, because I think there's a bunch of your audience who'll see 24,900 gram and go, awesome. But then they read, oh, it's 0.2 of a meter, right? So how do you used the phrase earlier, surgically remove, right? And the guys next door also have been doing a lot of this. So explain what that process looks like.
So a lot of people think because you have something really narrow, you can't mine it narrow. That's not true. We've proven all over the world. It doesn't matter whether you're in Canada, Nevada, it doesn't matter where you are. Like I've done it in many parts of Canada. I've done it in Nevada, Australia, South Africa. But we're in Idaho today. We're in Idaho and we're mining. We just took out this stope and we see a mess. It's 1.1 meters wide. So let's assume that area we hit was 0.2 meters. And that is an exception. Some of our stuff is 3-4 meters wide, right?
Yeah.
Some of it's 4 meters wide at 900 grams. So we're going to mine to the width of that vein. But when we're mining something that's 30 centimeters wide, our minimum mining width with a jack leg is 1.1 meters.
Right, yeah.
So we're tapering down with a long hole drill, putting a top axis and a bottom axis, and we're still doing it extremely narrow, extremely successful. And you're right, what I said is surgically remove it. That just means we might have to add 10 extra holes on the footwall and 10 extra holes on the hanging wall so that we pre-shear the rock. That just means we're surgically removing. When you go down the highway, when you're driving down the highway or a freeway and you see a rock wall and you see those tubes and you see half barrels along a cliff or something, you go, wow. Anybody who's driving down the freeway, turn your head and you see a rock wall and you see those half barrels, that's what we want in a mine, man. Okay. The best way to explain is you're driving your automobile, you're going down a freeway, you look at a rock cut, you see those half barrels. We want that in a mine. When we see those half barrels, that's pre-shearing it. That means a lot of those holes weren't even blasted. They were drilled, maybe a detonation cord, and then the second hole might have been blasted. And you can see those half barrels. When we do that, we carve it out surgically and we can remove that rock to 1 meter wide. Whereas people said, many people, even some of the people who used to work for this company said, that can't be done here. And we're like, well, why can't it be done? Why can't it be done if we are very strategic and we're very good at our plans and we bring in the best drillers, we bring in the best planners and the best blasters. We got to have the best drilling, the best blasting, and the best mucking. And we've already proven again. I know I keep bragging about it because it is something we should be proud of. It hasn't been done in 2 decades here.
Okay. And one thing, just to back up that comment on taking this out surgically, right? You run the math, even on a 0.21 meter wide vein at 25 kilos. Let's assume the rest of the rock is unmineralized, which is just not true, right? There's other veins that are stacked there. That's dilution by 5 times. You're still mining 5,000 gram per ton in that area.
There's a
right?
lot of leeway.
So,
there's a lot of leeway, but even
right.
so, you still want to be as efficient as you can be. So that's why I think it's worth explaining that process of getting after it. Let's talk about that kind of stacking and sort of, what are you seeing underground there in terms of.
Before we go there, we just want to say on what you said, because you're so correct that grade really is king for us. We're not trying to mine ounces for the sake of mining ounces. Grade matters to us. Our mill has a capacity of 750 tons a day. We don't want to mine 100,000 ounces in 100,000 tons. We want to mine it in 50,000 tons so we can put more tons through that mill. So grade really does matter for us. So to your point about should you be mining it narrow? Of course, we always should. So we move less tons, but then we're getting the same or more ounces at the back end of the mill. So for us, it's always going to be make sure that we improve the grade by mining it as narrow as we can and leave the waste behind.
Okay, look, we're in danger. We could very easily, because you're very excited about, and people understand that you know a lot about what's going on under the ground there. These are investors just calling in all the time.
Yeah, that's our phone.
You missed the boat, boys. No, and we should do that another time. But what I want to do, especially when I've got the chance to see you face to face, which is so rare these days, is talk about the kind of commercial reality of building a business. Okay, you've picked up this asset, you've done the deal with Eric, you've got a whole bunch of debt money in there to be able to kind of get after this the way that you want. You've seen a reaction in the market, which is great. Quadruple the share price, fantastic. And you're always going to be challenged with these so what's next, boys. So what are the commercial steps that you're putting in place to get this thing up and producing the cash you want? What do you have to do to kind of build a business here and not just keep plowing money back in the ground? That's what I'm interested in.
Yeah, no, a sustainable business, right?
Yeah.
You want something that's sustainable, something that you can repeat, that we can enjoy. And look, it's not rocket science here. This is not about, oh my God, they're trying to send a man to the moon, or they're trying to they're trying to invent something. We are not. In fact, if you look at some of the earlier meetings, all we're trying to do is going back to the basics.
Right.
We're saying, look, go back to the basics, put the waste development in front of yourself, have enough working faces so that I can have enough drilling ahead of myself. All I need to do is drill and blast 4 stopes a month. That's it.
Keep it simple.
It's as simple as that. And people go, well, why didn't they do it before? Well, honestly, Matt, I don't know. I can tell you that there was a lot of resistance. I know money is some of it, but the lack of knowledge as well. In order to do long hole, you need to make sure people know exactly what they're doing. I know for a fact now, and I didn't know this during the due diligence, I'm aware that it was tried here about 5 years ago. I was not aware during the DD. We found the files and somebody spoke to us about something while we've been here for the last 7 months. Now, what occurred was somebody went in there, drilled a stope. It was supposed to yield about 10,000 tons. It yielded 30,000 tons. Back to your point. Well, what if it's this wide, Paul Huet, and we blast it, and it's the width of the freeway? What happens then? Well, that actually occurred at our mine. And then everyone went, it doesn't work, it doesn't work. So when we came in, before we even tried to change people's minds, we just said, well, all right, listen, rather than try to convince everybody that this can work, explain to me why our neighbors are doing it. Just tell me, because they're in the same rock formation. Why? And they're deeper than me. They are much, much deeper than us. So geotechnical issues, they have even more than I do. How is it possible? Just explain to me that they're very successful. And I understand now 6 years ago, I didn't know this before. It was tried, it failed. But who led it? Who drilled it? Show us the design, show us the CMS. CMS is our cavity monitor surveys, showing us actually the results of it. And there's truth to say that there was one tested and it failed miserably. It left an impression on people. It left an impression on people 6 years ago. We had no idea that had happened. We knew, look, It's already being done. I knew based on the compressive strength of the rock that this is going to work because it's vertical. If this thing was flat lying at 45 degrees, I would have a lot more heartburn. I would say it's not impossible. I'd say it's going to be a lot more challenging because you're going to have hanging wall exposures and it's going to be a lot more difficult. But your question is this: how do you take a mine that's been around for 100 years and you start making money? And it's the question I asked everybody in the due diligence. If we can't walk in here, we're not going to write checks. We're not going to go convince Eric Sprott. We're not going to be part of this if we didn't believe we could walk in here and make some changes and not keep it simple. Just keep it simple changes, not trying to send a man to the moon on something else that's never been done. By basic mining standards, by doing what we know how to do best. If we didn't believe in that, we wouldn't be here. Okay. We're here because we're repeating the model that you met with me about 8 years at Karora. When I walked in at Karora, people said Beta Hunt could never, ever do 30,000 tons a month. Never gonna happen. Remember, we were struggling, we could not do it. And then after we sold it, we were doing 110,000. All we're doing is saying, look, we're not trying to prove anybody right or wrong. All we're doing is what's best for the mine? How does the mine make money? How does it sustain this new methodology that we're implementing? And how do we keep the mine around for 20 or 30 years? This isn't a short-lived thing. This thing is going to be around for 3 decades or more.
So let's talk about that stacking of that sustainability argument. Okay, so you've got to get this thing up and running, right? You just get the money flowing, route to market, all that kind of good stuff. Show people you can do what you say you can do. Then you're going to kind of build up that scale. And is that what are you doing to prove that with the asset you've got now, Galena? Mm-hmm. And what can you do to kind of build out, whether it be a portfolio approach, organic, or whatever the heck you've got planned up here, and how do you time and phase that? Because I don't want you to just run and fall. I want you to create a flue.
I hear you. Look, I hear you loud and clear. And the first step, always in our mind, was always get Galena right and Mexico right. Get the two assets that we have.
Yeah.
We cannot afford to distract ourselves yet by making these mistakes and going all over the place. Look, there's some great M&A that exists. Nobody's going to convince me that there's not some consolidation and some synergies in the district, because there is some. There are some tremendous synergies that exist. In fact, that's some of the stuff we looked at. But in order to do what's best for our shareholders and get a better shareholder return and make the mines make money, we've got to be very, very laser-like focused on our two assets. That wasn't being done. That was ignored. You got two assets here, one in Mexico, one in the US, that have the ability to generate plenty of cash flow for this company to never have to raise money again. We should be able to build stuff from this and grow the company from the cash flow from the operation. We got to get them right. We got to get them right. And that takes a bit of time. And we are doing, like, there's steps. Get into EC 120 in Mexico. Put in the decline, get the equipment. Get into EC 120. Galena is more complicated because it's an older mine. It's not a decline. In a decline, you can slash the decline, bring in bigger trucks, bigger stopes, or smaller stopes, whatever you need. The infrastructure in this, the shaft's been around here for 100 years, so upgrading that was a big step for us to get it from 700 tons a day to 1,800 tons a day. Very, very important we get that done before year end so that when January 1st rolls around and we put out guidance for the first time, we are running with a brand new system in place here. It's a brand new upgraded system with long hole behind it feeding.
Okay, so that's that. All right, I want to bring you in here. Corporately, you need to set this up. Yeah. We got some money in. That's nice. Yeah. So you obviously got to support. There's some nice names in there on the register now. But you got to get this set up to look like a proper company, right? Because you come in here, you're picking up the pieces, fixing the pieces, but you've got big ambitions. So what do you got to do to kind of lay that story, that narrative out?
Yeah. So where we take the company from here is, we've been spending a lot of time this year on study work, on better understanding the operations, training the team, upskilling everybody, bringing in new leadership, and starting to inject some of the capital that we've raised in these projects that Paul's been outlining. Next year is that first step of growth, right? What we're going to be laying out here is a plan, and we've been out there verbally saying it. Look, we don't have official guidance, but we're saying we're bringing Galena back to its former glory, and we're not going to stop there, right? That's 5 million ounces a year and beyond. That's well out there in the market, and there's multiple analysts that have launched on us that are saying that in their research, and more so. The key triggers that we need, or steps that we need to get there, are this shaft upgrade, becoming more efficient in the shaft, being able to move more ore tons up that shaft and waste where we need it, getting better at mining and reducing our mining cost per ton. Look, mining cost per ton historically here with cut and fill were very expensive. We're bringing that down significantly. We're also focusing on some of the other metals that we have. We're reintroducing byproduct credits, right? And being paid for those. And I'll touch on those a little bit more in a second here, particularly antimony. We've had some very exciting news out just this morning and a great market response, obviously. So focusing on the byproduct metals, becoming more efficient in the mill, switching to higher grade sources of ore. So Paul talked about some of the exciting exploration that we have. We're also transitioning the mine to a heavier weighting of our silver copper ore, which conveniently is where our now paid copper byproduct and our antimony is, but also our higher silver grades, doing more with the same tons that we're moving up that shaft by bringing up higher grade material. All that leads us to the free cash flow inflection point when this thing starts spitting out cash. We're all enjoying, obviously, $42 silver. We don't need $42 silver for this thing to start generating cash.
Yeah.
We can't come out here right now and tell you the cost structure of the operation. I refer everybody to the analysts that cover us because they're very close to what we expect as well. But when you start doing the math on, let's even just pick 5 million ounces a year at Galena, and you start thinking about some of the margins that you'd expect with bringing these byproduct credits, increasing the tonnage, becoming more efficient, you're generating serious free cash flow at these prices. And look, the way that we forecast internally, we're using $29 silver, right? We are way above and beyond where we do our budgeting levels, where we do our forecasts. So we're all enjoying this. The key now is going to be, you know, this is a marathon, it's not a sprint, but we want to get there as quick as we can. We're actually ahead of schedule, as Paul mentioned, on a couple of our projects. We want to get this mine to that point as fast as we possibly can. And in the meantime, our asset down in Mexico is doing a phenomenal job of delivering there into the EC 120 zone, which is a much higher grade silver copper focus zone. Another investor call, fantastic, we'll take that later. And carrying us over that period. One of the key things I do want to touch on just quickly here, especially with the share price, and we'll go back to some of this byproduct stuff and get into some of the numbers, is earlier this year, as we were out there in December, we took over officially on December 17th. Even in December, we were talking about how advanced our debt discussions were, right? Mm-hmm. We had a debt package that was on our table at about $30 million. The success that we saw in the market early on, and then in laying out some of our plans, we were approached by several other groups. And we then decided to restart the due diligence process, which led to that debt that we've been talking about in December being delayed, right? We delayed it by several months. Now, the market is a wonderful rumor machine. Of course, lots of people were out there saying, well, you said you're going to have the debt, a couple months ago. Then our first quarter cash balance came out. That was sub $10 million, which for us, we knew that was right around the corner, not a problem. But what you saw was people starting to lean on the share price a little bit because they said, well, how are they going to bridge this gap? Look, Cosalá is still ramping up, it's going to get there, but Galena needs this money now. Yeah. When we announced that debt, I think it put a smile on all of our long-term shareholders' faces when they saw that share price pop, not just in the fundamental news, but a bit of a short squeeze from people that were putting on there. Yeah. That debt, this is what I want to get to here, that debt and that capitalization carries us through this whole period. Cosalá injects more cash on top, and this thing turns into a highly, highly, highly profitable.
So that sequence is really important in terms of the cash, but I just want to get into the kind of corporate stuff here. But it's more about we're over $1 billion, are we? We're over $1 billion.
Just over $1 billion,
right?
1.029.
So all of a sudden, indices matter to you, ETFs matter to you, and obviously the share register would, I guess, permit a lot of that to happen as well. So can you talk about those sorts of conversations, what expectations are out there of you?
Yeah, 100%. So we were just added to a couple months ago, actually 3 months ago now, added to the SIL, which is probably the largest and most important silver-focused indice. Yep. Since that's happened, we've seen several of the groups. It's basically 11 different names that are listed on there and probably about 7 or 8 different funds that own the majority of them. Once you're on that index, they have to buy you. Yep. We've seen the majority of those come in, some in smaller toehold positions while they're doing their due diligence for larger positions. But what we've done, and we took a very, very active approach to this early on when we took over this company. Back at Karora, it was about, there's a huge retail following there, which was fantastic, and everybody made money along the way, but we needed more institutional ownership, and we executed that. What we've done since October is take this register from 7% institutionally owned up to 63% institutionally owned.
Yeah.
And very early on, we made sure that our stock that was becoming available was ending up into the hands of our core shareholders that supported us at Karora. Those are called what we call sticky hands, long-term shareholders. That enabled the share price and the market cap to get to where it is. And what we're seeing now is we're talking to one group who will remain unnamed right now, that are looking at $30 to $50 million orders, right? Like that next snack bracket of investors, guys that want to be there for the next 3 to 5 years while we execute on unlocking not only the value at Galena, which by the way is not going to be stopping at 5 million, and at Khosla, but some of the stuff that Paul alluded to. There's so much, synergies that can happen in the region, other things that we can do further down the line once we're ready. They want to be along for the ride, just like they were at Karora.
Are you seeing a bunch of like new money? Because I think there's a real move to, we want
share
revenue,
consolidation.
we want near-term revenue, we want people who can build and execute. They got to stop. So has that been part of the narrative? It's like saying, look, we trust your track record, we trust your history here, and we believe that you can execute on what you say. Because Paul's saying, keep it simple.
Yep.
Keep it simple.
Keep the mining simple.
Keep the mining simple.
Keep the mining
for
simple.
sure.
Yeah, absolutely. And then the other point that is something we just announced last week is we did a 2.5 to 1 share consolidation. We also did this to tremendous success at Karora. At Karora, it quadrupled our daily dollar traded volume, not number of shares. In the end, that doesn't matter. What matters is the dollar amount traded. So what we've done here is we've increased our share price over to a critical level that was $3 Canadian. What that allows almost every broker to do is opens up use of margin for trading.
Yeah.
And when margin is opened up, what's called a pro desk or a liability desk or an in-house trading desk of a broker or a market maker, it allows them to get involved. They don't want to just play with house money. They want to leverage their exposure to this. So you get more trading from these desks. You get the capability for retail shareholders to also use leverage at their own discretion to get involved in the story. And that is almost like a snowball effect when it comes to increasing your daily traded dollar value, which then, of course, snowballs the impact of these indice additions, which allow bigger funds to get in. Because, look, they love to get in. They like to get on placements. And as Paul mentioned, we're well capitalized, no placements coming. They want to get in on these things, but it's hard to get in and out of these stories when they're not, the barracks of the world. So the more daily traded dollar volume have, they say, okay, I can spend 10 days entering this story. And then when I'm ready, it's probably going to be even better. I can probably spend 4 days getting out if I need to. Yeah. And that's what they look at, and that's how you track them, because they got to be able to get in and they got to be able to get out. So we've set up those steps corporately with the share consolidation, with those key early institutional shareholders, with the new ones that we're marketing to. Look, Paul mentioned it. We've got about 38 official meetings here. We've got double that in pending amounts. Like it's a wave of new money coming in, of new institutions from all corners of the world. It's an exciting time.
This is the thing that very few can do. Very few companies can do this. You've done it in a very short time frame as well, Paul, where you have understood and created a mechanism for the market to play your story. So that's fantastic. Let's drag it back to the announcement today on the antimony and other byproducts, and just say what could that mean for the bottom line?
Yeah, 100%. Really, really exciting news. So the first big step that was attached, around the same time as the debt that we announced was a partnership with Ocean Partners and Tech Resources. We did that a couple months ago. That was a new offtake agreement that kicks in on Jan 1, 2026. And we did talk about this before, so I'm not going to belabor this point. Yeah. But basically what we did was we took metals that were previously penalized, which was antimony, copper, gold. They're only paid for silver and lead, right? Very hard to believe. And look, part of it was a product of where the company was. The company was deploying every cent that it could into Relief Canyon. It needed capital yesterday, not in 30 days from now. So they're focused on days payable, right? And as a result, they're focused on only getting paid for lead and for silver, and the rest were penalized. We flipped that on its head. We're now going to get paid for all of those elements. So that was step one, along with a very nice placement from Ocean Partners that came in at a premium, and obviously Tech extremely excited to receive our product, our concentrate product. But the next step was, and we announced the first phase in May, was what do we do with all this antimony? Like I'm sure you have lots of people on your show here talking about antimony. There's lots of interesting development projects. There's some interesting science projects that we all hope succeed. Of course, we want everybody to succeed here. But there are no currently producing antimony mines in the U.S. except for Galena. Galena today, at no additional cost to ourselves, we are taking the same ore that has silver, copper, and antimony in it out of that mine through our mill and shipping it off. So what we did was we ran a whole bunch of tests on the tetrahedrite material. Now, just a quick refresher here. This isn't proving something new. To Paul's point, we're not reinventing any wheel. In fact, Galena's ore was previously going through the Sunshine Mill just down the valley up until 2001. So this material has already been processed, recovered, and turned into antimony product out of the tetrahedrite material. We reran a whole bunch of tests, and the first phase in May showed 92 to 96% recovery of antimony to our copper concentrate. Great first step, fantastic. The next phase was, what can we get out of that concentrate? And we announced that this morning, and we put a huge amount of data out this morning to help all of our analysts and all of our investors really understand what we're looking at here, including the last 20 years of production of antimony and copper that wasn't paid for at Galena. It's remarkable. Over 20 million pounds has come out of that mine. What we announced this morning, that we are getting 99% recovery of antimony out of that copper concentrate. And it is a product which can then be turned into any of the antimony products that are required, whether it's in specialized electronics, whether it's munitions, whether it's any of these batteries. It's a really, really exciting result that we can produce something that easily. And not only that, and just for the potential metallurgists that are listening there here. The copper is suppressed perfectly, so we can recover that on the back end. The arsenic levels that are there are reduced dramatically and also come out the back end. So all the things that you want to be happening metallurgically are happening there to produce a really strong product. So what does this mean for our bottom line? Now, we do not have an antimony resource yet. That is going to be included as we move forward. We're working hard on that, and we want to get that out to the market alongside with a major resource update. Might not happen in this next one. It might happen the one after, but we will get one out there eventually. But what we did is something, we're leading people to do a bit of their own work here. All of the test work we've done has shown a ratio of about 0.62 to 0.69 times, and more so towards the upper end of that range, to 1 ratio of antimony to copper in this product. So when you start to look at some of those copper numbers and you start to apply those ratios and you start to think about the antimony that can come out of here, it's
so
pretty
talk to me about the
powerful.
market, or let people understand about the market. Okay, you're a North American producer. North American demand, obviously it was cut off from China at the end of last year.
That's right.
Everyone was rushing to antimony. Can you access the North American market?
Absolutely, 100%. We've had, Paul and everyone is getting, phone calls every single week from multiple groups that want to get involved in this. We've obviously seen what's happened with several other groups in terms of DoD grants that are happening to move things forward. It's absolutely phenomenal. The difference here is this is already coming out of the ground right now. We're in the next phase of engineering where we're studying and evaluating potential options for recovering that product. Can we work with others in a smart way? Can we get some grant money from the government to do this? All these options are completely open and possible. And I keep reiterating this point. This comes at essentially no additional cost to America's gold and silver shareholders. That cannot be understated. There's other projects out there that need $1 billion to get started. This is already happening. It's about going back to what we said right at the beginning of this call. How do we become more efficient and smarter with what's in this tremendous asset that is Galena? So that's our work. We're into the next phase of engineering. We're going to do that. We're going to do an internal study, and we're going to look at how we basically monetize this thing at much higher levels. And that will drive a very, very, very interesting bottom line when we start cash flowing out of it.
It changes things. It changes things. Yeah.
So I think corporately the setup looks fantastic, and as you've stated, that operationally, you know what you're doing. You've got the money to go and do this now.
We do.
So I know you guys got to rush off, and the sun is setting. Give me the next 6 months. What are we looking at?
Yeah, the next 6 months is about preparing for next year and getting those projects we've done. And I'll repeat them, but they're really important. Getting that shaft work done, phase 1 and phase 2 complete. And you'll see us putting out some updates on that. Yeah. Getting into EC 120 in New Mexico, getting in the new equipment in Mexico. Those are very important by year end. Getting the engineering work for the paste fill plant done. That has to get done this year. So we get that engineering work done for the paste fill plant, and then we continue just improving our long hole. Like our first one was phenomenal. We're just going to start stepping out and understanding what's the perfect length we can do, what's the perfect diameter of drill hole we want, what's the perfect bench height of stope we want, what's the perfect scoops, everything. So just making sure we improve our long holing as efficiently as we can. So we're down to 4 stopes a month instead of trying to blast 70 blasts with a jack leg 70 times a month here, Matt. So it's those steps, those projects are very important to get us done, to set up for guidance next year, to put us in a completely different situation here. And it's about what you said. The mine's got to make money. Too often we get so distracted with everything else, and you're like, is the mine making money? Last month, did we make money? Yes or no? And like, well, I didn't ask. How is it you didn't ask if the mine made money last month? Like,
I mean, well, I think it's what you did at Crux. It's kind of the point where you kind of got the opportunity for free cash flow, right? That's right. Or net. However you want to look at it. Real money, not money you're plowing back in the ground.
That's right.
That seems to be what you're aiming to.
For me, I think these byproduct metals, I know we talked about them, but I don't think we can ever explain how big and how important they have the ability to be. You know, those years that we sent it up north and we were getting penalized for it, it actually, believe it or not, it sounds corny, but it was a blessing because we were able to exactly know how much antimony we produce. Everyone's like, well, how do you know how much you produce? Because it was assayed. Every assay at the back end was being penalized for us. They said, okay, this is how much antimony you produce. We're going to penalize you now. Now, going forward, we're going to get paid for it. But the reality is we produced almost 20 million pounds in a time, in that time frame, when we weren't very focused in the copper tetrahedrite areas. We have 2 types of ore. We have a lead ore, we have a copper ore. And it's not hard for us to focus on the copper ore. We've only produced 1.3 million ounces of silver. When you triple the amount of silver or quadruple the amount of silver, then you're going to see antimony, copper, and lead also increase. That number, that 20 million pounds, it's a measured number. We know that. If you were to use today's price of antimony, and Matt, I get that that's cheating, but if you realize it, you said, put a pin in today's price, what is that? That's $500 million. It's just gone. It went away. Now, the U.S. consumes, what is it, about 40 million pounds of antimony per year. It's an important mineral that we must get. China cut us off in November of 2024. We're the only producer of it. Everybody around me has got grants, DOD, EXIM, all these kinds of things. I'm the only one producing it. So you think that's not an opportunity for us? You think we can't be excited? We're very focused at getting that mine fixed. But along the way, there are a lot of exciting things that we're going to be focused on and unlocking more value here.
Good, man. We'll stay in touch.
All right.
You're excited. And good luck with all the meetings. I know you've got a bunch of them. Good to see you guys, and best of luck this week.
Thanks, Matt.
And next. It never stops.